If you are using the A.P.A strategy but still not sure exactly where to enter, this video could completely change the way you trade, because the A.P.A strategy doesn't just have one entry model. There are different ways to enter, and the model you choose should depend on what the market is showing you. In this video, I'm going to break down different A.P.A entry models, showing you exactly when to use each one, when to stay out, and how to avoid taking the wrong entry at the wrong time. By the end of this video, you'll know exactly which A.P.A entry model to look for when the setup appears. So let's get straight into it. So there are different types of A.P.A entry models, like I've said. We do have 6 of them, and the ones that we do have are the ones I've shown you: the support V formation, resistance A formation, we have the RBS, SBR, OCL, and the QM model. So I'll be taking you through a recap of each and every one of those, and just to show you how they look like, how the models look like, and how you can actually get to trade with them. So I'll start with the support V formation, whereby the support V formation, this is how it looks. So price pushes to the upside, gives us a V-like structure. Here we do have that V-like structure. This is what I'm talking about, the V-like structure. So once you get that V-like structure, price normally forms that liquidity, the yellow line, that is our liquidity level, and now price pulls back, gets support on that V level. So that is why it's known as the support V formation. That is where it gets its name, the support V formation. So that is just one model. So you normally use it in a way that you enter, your stop loss is placed below the entry, your stop loss just a few pips below the key level, and then you target the buy side liquidity. So like you've seen, this entry model is suitable for buy setups. Remember, support V formation, you identify where price has formed a base, gives you liquidity, and then pulls back into the key level and takes up a buy. In basic market knowledge, it's known as the double bottom. So that is a buy setup for the support V formation. And now we go to a resistance A formation. So for a resistance A formation, you will notice we have this A formed right there. So once we have that A formed, we just draw our horizontal line where we expect now price to come, mitigate, and then continue the push towards the downside. And the way we trade this particular entry, we place our stop loss just right above the key level, and we target the sell side liquidity. That is how you enter on this resistance A formation. In basic terms, it's always known as the double top. I know you've heard of a double top. So that is how it's known. So that is liquidity, and price comes in, mitigates our A level, and then gets resistance and is pushed towards the downside. So you just target the sell side liquidity. That is how easy it is to execute that particular trade. So we've discussed 2 so far. I've talked about support V formation, resistance A formation. So now I'll take you to the third one, in which the third one is known as resistance becoming support, or the RBS. This is actually just a breakout strategy. So in this one, we use it to trade the buys. So price was pushing to the upside and then gets a rejection, then comes, breaks that particular high, and then retests the high to now become bullish. So that is what is known as the resistance becoming support. This area acted as our resistance, but it gets broken, and now it acts as our support. Right there, we have it acting as our resistance, pushing price towards the downside. But now once it is broken, it now acts as our support. And liquidity must always be formed right below it for us to take an entry. So the way we trade that one, we take our long position, we place stop loss just below the key level, and we target the buy side liquidity. So that is how we trade the RBS. Remember, price was pushing towards the upside, getting rejection on that level, sells a bit, then comes up, breaks up the level, and now the support, the resistance now turns into our support. Now we continue the trade towards the upside. That is now what is known as the RBS. So now I'll take you to the next one, which is known as the support becoming resistance, which is the SBR. Price was previously pushing, getting rejected, getting support from this level, and pushing towards the upside. But now, when price is now able to break that particular level and come below that level we expect to use it as our resistance, whereby we expect price to be rejected on that level and continue pushing to the downside. So how we trade this particular level, we take our entry, stop loss just a few pips above the key level, and we target the sell side liquidity. So that is how that particular entry model is taken. Remember, previous support gets broken and now it becomes our resistance, and we trade targeting the sell side liquidity. That is support becoming resistance. Liquidity must always be present for you to take an entry. You can always take your entries using your lower time frames like the 5 minutes and the 1 minute, whereby you wait for a change of character on your lower time frame and then you proceed to take your entry. So with support becoming resistance, the SBR, I'll be now taking you through the next model, which is known as the QM buy model. So the QM, you realize that there's the QM buy and the QM sell. So the QM buy model looks like this. Price was pushing towards the downside, but now we get that first change of character, whereby right there we get a first change of character. Price pushes to the upside, gives us a form of liquidity, and now pulls back into this left shoulder right there. Right here is where now we expect price to pull back into and then give us an entry. So if I draw a horizontal line just like that, you realize that this left shoulder now becomes our entry. So now this is a QM buy model. We go ahead and take our entries and stop loss just a few pips below that left shoulder, and now we target the highs, the buy side liquidity. All right. So in basic terms, this is just known as a head and shoulder pattern. I know you've heard of a head and shoulder pattern. This support becoming resistance is just a break and retest. A break and retest. Easy terms, all right? So since we are doing advanced market price action, so we just call it the SBR, support being broken, becoming resistance. The same applies to the RBS. This is just a breakout and a retest. So resistance becoming support. Easy. And now for the QM buy, remember I've said it's just a basic head and shoulder, whereby this is our left shoulder, our right shoulder, and this is our head. So head, shoulder, and that is it. The QM buy. You just wait for a change of character and then you take your buys. So this one is used for buy setups. Alright, price was pushing towards the downside. We get a breakout and then we retest on the left shoulder, and now we continue the push towards the upside. With that said, now let me show you how a QM sell model looks like. So this is the QM sell model. And you realize that price pushes towards the downside, giving us a change of character right there. Once we get that change of character, we now expect price to reverse on this particular left shoulder. So we go ahead, draw our horizontal line on that left shoulder, and now we expect price to pull back into the zone and then give us a reason to sell. So the way you enter these particular models is just for you to move down to your lower time frame for a more refined entries. So you could be using the 1 minute time frame or basically using the 5 minutes time frame. So this is just known as a basic head and shoulder, inverted head and shoulder. But here we call it the QM model, the Quasimodo model. You wait for price to pull onto that particular left shoulder and then you take your entry. So that is known as the QM sell model. Very easy. So now I'll take you to the OCL. Now the OCL is also divided into two. We do have the OCL buy and the OCL sell. So on your higher time frames, like the 4 hour, 1 hour, and even the 30 minutes, you just plot a horizontal line between two continuous candles. You realize that there are times that price is pushing towards the upside very aggressively, and it doesn't want to pull back down to your order blocks. So all you do is just draw your horizontal line and then you continue the trend. So the OCL buy is just used for buy setups. You continue with the upward market, whereby the market was bullish and you just identify your key level, which in this case is just the gap in between the two adjacent candles, and then you continue to buy to the upside. The same applies to when you're selling, like the market was very much bearish and now you identify your two adjacent candles, draw a horizontal line between the two candles, and then you take your entry once you get confirmation from your lower time frame. That is how you go ahead and take your OCL sell model. You go ahead and get confirmation on your lower time frame, like the 1 minute or the 5 minutes. So this OCL buy, like the name suggests, is used for buy setups. The OCL sell is now used for sell setups. So in summary, if I now show you in summary of all that I've shown you, for buy entries, you can go ahead, take a screenshot of this. For buy entries, we go with the RBS, whereby the resistance now becoming our support. And also we get to use the support V formation, the QM buy, the OCL buy. That is for our buy entries. And now for sell entries, we use the SBR model. We also get the resistance A formation, the QM sell, the OCL sell. It is that easy. That is all you need to master the A.P.A strategy. So now whenever price is in your key level, let's say the market is bullish, you want to use the buy entry models. And now when the price is selling, you want to use the sell entry models. Always trade in the direction of your higher time frame. Like let's say you are using the 1 hour time frame as your higher time frame. So you only trade according to the direction of the 1 hour time frame. Like when the 1 hour is bearish, you only want to use the sell entry models. And if the 1 hour is bullish, you will only want to use the buy entries models. It is that easy, guys. I always say keep your trades simple. Do not complicate your trades. And I wish you all the very best. Remember to practice proper risk management. For a complete course, I've attached a course at the end screen. Feel free to watch that complete course in order for you to understand these A.P.A strategies from A to Z. See you in my next video.